So if you are a full-time resident in Boca Raton or anywhere in Florida and you've homesteaded your property, you know that the Save Our Homes Act is your best friend when it comes to property taxes. It caps your assessed value so property taxes don't skyrocket while you live here. And if you move within Florida, you can port up to $500,000 of that tax savings to your next home. It's a massive win while you're still a resident here. But here's where people sometimes get a little tripped up. There's a second $500,000 cap that you need to know about, and this one is federal. When you sell, the IRS lets a married couple exclude up to $500,000 of profit from capital gains tax. This number hasn't changed since 1997. Think about that. In 97, the median home in Florida was around $125,000. Today, home prices have nearly quadrupled. That $500,000 safety net used to cover practically everyone. Now it's leaving long-term Florida homeowners exposed to potentially massive tax bills. So the question is, what should that number actually be? And the answer? It depends. If we simply adjusted for inflation, that 500 limit should be roughly $1 million. But if we calculated based on how much Florida real estate has actually appreciated since the 90s, that fair exclusion should be closer to $1.8 to $2 million. This is exactly why there are talks in Washington right now about finally doubling these limits, because the math from 97 just doesn't work for 2026 prices. The legislation is entitled the More Homes on the Market Act, and this bill is specifically designed to fix capital gains exclusions. It's currently working its way through the House of Ways and Means Committee and has gained a lot of momentum because lawmakers finally realize that this tax trap is a reason that there is low inventory. And if it passes, it doubles those limits to 500 for singles and $1 million for married couples. But is it worth waiting for? You see, if you're sitting on a $2 million gain, meaning your home is worth $2 million more when you sell it compared to when you bought it, and the bill passes, you could potentially save $100,000 or more in taxes. And that's a massive incentive, but most people aren't sitting on that much equity. And if we're waiting on banking to pass a bill through Congress, it's a gamble. If you wait 6 months and the law doesn't pass and the market shifts or buyers pull back, you might lose more in home value than you could have paid in taxes. The smart move isn't necessarily waiting for a law. So while we wait for Congress to act, here's a pro tip you can actually use today. It's called your adjusted cost basis, and it's the most overlooked tool in real estate. Most people think their gain is just the sale minus what they paid for the house 20 years ago, but that's not how the IRS sees it. Every time you made a capital improvement to your home, you effectively increased your purchase price in the eyes of the tax man. I'm talking about the big stuff, that new roof you put on in 2018, the impact windows, the kitchen remodel, and even that backyard patio. But it's also the stuff you may forget about, like a new HVAC, water heaters, and even driveways. These aren't just expenses, these are additions to your basis. If you bought your home for $400 and spent $150 on improvements over the 2 decades, your cost is now $550. When you add your $500 married exclusion on top of that, you can now sell for over $1 million without paying a dime in capital gains tax. This IRS now distinguishes between a repair like fixing a leaky faucet and an improvement which adds value or prolongs the life of the home. So keep in mind that repairs don't count, improvements do. Now, I'm not a CPA and this definitely isn't tax advice, so you need to sit down with your tax professional and bring those receipts. Bottom line here is, stop worrying about what Washington might do and start looking at what you've already done. Dig through those old files and add up your receipts. You might find you're already tax-free. Have you kept track of your home improvements over the years? Drop me a comment below. I'm curious to hear what you have to say about that. And if you need a list of what the IRS typically covers as a capital improvement, shoot me a message and I'll send it over to you. I'm Adam Gutman, your local Boca Raton realtor, and I look forward to seeing you around town.